In this video, we'll be covering how to use the MACD indicator to help understand when a move in price may be losing momentum. MACD divergence, in essence, is when the MACD is disagreeing with price, suggesting that a trend is losing momentum. So, if a price is in an uptrend, as price is making higher highs if the MACD is making lower highs, then this is referred to as bearish divergence. If price is in a downtrend, as price is making lower lows if the MACD is making higher lows, then this is referred to as bullish divergence. When MACD is diverging from price, it suggests that the current move in price could be about to stall. This being the case, if there is a divergence in play, it would be a red flag for any trend following setup that may be developing. Equally, MACD divergence might be one element of a counter trend or trend reversal trading strategy. As always, whatever your approach to trading the markets, always make sure that you are carefully managing your risk on every trade. Please like or subscribe to our YouTube channel for more trading education content.